Good morning, everyone. It is Tuesday, the 6th of April, 2021. And on behalf of Vetiva Capital and our media partners at Frontier Football Reports, we would like to welcome you back from the Easter break and thank you for joining us on our breakfast meeting this morning. Please note that this meeting is set to last for 30 minutes and is also being recorded. We'll give attendees of this meeting a chance to ask questions after all speakers are done. On our agenda today, Joshua Debisi, our financial financial analyst, will talk about Axis Bank's FY20 numbers. After which, we'll move to Shemu, who will give us a rundown, an outlook for the equity space, and this will be followed by Omorige, who will give us a rundown and outlook for the fixed income space. After this, we will then move to our media partners with their own Pan African updates. We will now start off with Josh and his comments on Axis. Good morning, Josh.
Good morning. Thank you. So, Chido's here says Access Bank released their results last week, Thursday. They reported a 15% year-on-year improvement in gross earnings to about 765 billion naira. This was despite the fact that the interest income moderated by 9% year-on-year to about 489 billion. So it was also thanks to the fact that the non-interest income went up by about 112% to 276 billion thereabouts. Overall, there were a few reasons for this significant improvement. Number one, the fees and commissions income went up by 27%, and the income from investment securities went up by about 86%. And also, they did manage to record a bit of a moderation in their foreign exchange losses. So notably, Access Bank for the past couple of years have been the only major tier one bank to report foreign exchange revaluation losses, whereas all the other banks have recorded pretty significant gains. But despite that, they still managed to come up with the 276 billion figure. On the other hand, the provisions went up by about 212% to almost 63 billion naira, whilst operating expenses went up by about 27 billion. But the significant increase in operating expenses will be put down to the increase in AMCON charges. This is on the back of the fact that Access Bank's net assets went up by about 26% year on year. Overall, the PBT came in 13% higher at about 126 billion, while the profit after tax came in 13% higher at about 106 billion. They also declared a final dividend of at least 55 kobo to bring their total dividend payout for the year to 80 kobo, which is a significant improvement on last year's dividend payout. The dividend payout ratio currently stands at about 26.8% from last year's 23.7%, and their return on average equity is at about 15.6%. We'll have the report out for you this week. Thank you.
Thank you very much, Josh. We will now move to Cheryl and the equities market. Good morning, Cheryl.
Good morning, Chidoze, and good morning, everyone. As usual, we take a look at performance across the Western African region. So we start with the PRVM. In that market, we saw the composite index closing the last trading session in red, losing about 2 basis points on the back of mild profit taking from gains we have seen in the market recently. The index saw a flat market breadth, and the year-to-date return currently stands at negative 2.86%. For Ghana, the composite index continued on its flat closing run as the index remained unchanged. And I think we've noticed this for a couple of trading sessions, flat closing, no change, no gainers and no losers. So we just continue to watch the market. Investors traded cautiously with volume and value traded in the session, um, declining significantly. Cowbank, as seen in recent sessions, continues to lead the activity, but and they've been supported by MTN Ghana and Ghana Oil in that space. The market ended the week with a gain of just 6 bips, while the year to date for the Ghana Stock Exchange remains positive at 13.99%. So moving to Nigeria, the Osho Index ended the last trading day of the week, and also the first trading day of the month and quarter, on Thursday lower, as the ASI closed 29 bips to further push down the year-to-date return of the market to negative 3.33%. The banking sector was largely responsible for this downward close, with Zenith, Stanbic, ETI, GTB all losing in the day, save for Access. The subsector closed the session quite in the red, 334 basis point down. This is largely on the back of guarantee marked down on that same day. That was on Thursday, so that really pushed down the price of that really pushed down the sector lower. So then we also saw a significant upward movement in the consumer goods sector, especially the breweries. Guinness, Nigerian breweries, and international breweries all lifted the sector higher, 128 bips, after 590 and 515 basis points green close in those two names. That's Guinness as well as Nigerian breweries. Unfortunately, this couldn't help the main boss close in the green. The insurance and oil and gas sector were the other gainers in the last session, and then coincidentally, they are also the only subsector with a positive year-to-date close at the moment. All other sectors have a year-to-date close of they are currently in the negative. Speaking to activity level in the session, that this continued to drop, with a 31 and 17% drop in volume and value traded. And investors reacted largely to dividend payments by some of the companies that announced their dividend payouts, in that flurry of results that we saw coming to the market on Wednesday and on Thursday morning. So the likes of Fidelity that declared decent dividend, UACN, Custodian, and a handful of them had a decent day in the market, as they all appreciated. So going into the new week, we believe, as most corporates have declared corporate actions, we expect investors to be focused largely on happenings around the fixed income market, see where rates will continue to play, and watch the CBN's body language. We also believe that movement in oil price will also be something that investors might be looking at, as some European countries continue to enforce or begin to enforce lockdown, just to curb the third wave of coronavirus that a few of them are saying. We think sell-off seen in the banks in the past week, we might see demand for some of the sound names that have been beaten down in that sector. Last week the sector was largely on the receiving side. So, but we believe that negatively, but we believe with a few of them that have been beaten down, we should see investors coming in to cherry pick. But generally, we expect a quiet and positive start to the week. Thank you very much.
Thank you very much, Shane. We will now move to Omorige for fixed income and currencies. Good morning, Omorige.
Good morning, Chidoze. Good morning, everybody. I'll start with the money market. The money market was relatively liquid on Thursday. System opening liquidity figures for Thursday was about 530 billion, which was a significant improvement from what we saw on Wednesday. Wednesday opening figures was about 377 billion. So during the course of Thursday's trading session, the CBN debited CRO from the system about 280 billion. And that significantly reduced system liquidity. Coupled with the CRR debits that occurred on Thursday, there was also FX retail auction. These two significantly drove market rates to the highs of 25% to 30% levels, coming from the 8 to 10% where it traded the previous day, which was Wednesday. So our expectation is that money market rates will trade at lower levels today, given that the funding pressure today will significantly reduce. Moving on to the FS market, despite the decline in oil price recorded on Thursday, we saw gradual appreciation of the Naira across all windows. The parallel market gained about 1 Naira to trade at a high of 413 Naira to a dollar. For CBN interbank market, we saw that close at 381 Naira to a dollar. The industry turnover increased slightly to close at $35.55 million on Thursday, coming from the $35.37 million recorded on Wednesday. So we expect the Naira to continue to trade at these levels, barring any significant inflow of FS into the system. Moving on to the T-bills market. The T-bills market closed last week on a very active note. The market traded sideways across all tenors for both NTBs and OMOs. We still continue to see sustained interest in the special CBN Bs. Most of the trades that were done on Thursday was majorly on the long end of the curve, especially March 31st and March 8th Bs. So our expectation for today is that the market will resume on a very cautious note, given the effect of the holiday on market activities. I'll conclude with the bonds market. The market was 2028, 2029, 20 crossed the 12% margin on the 2045. We saw some traditional players remain cautious on. So because of the cautiousness of the traders today is that the buy side interest will filter in gradually as market participants price in the expectation of a continued rise in rates across board. That'll be all for fixed income.
Thank you, Amorige. We will now conclude with Temple from our media partners on their updates. Good morning, Temple.
Good morning, Chidozie, and good morning to all the listeners. The IMF, that's the International Monetary Fund, we all know that they're beginning their meeting, their annual meeting or spring meeting today. They've been giving us some indications since last week by way of some press releases and comments releases. And now at that, preceding that meeting, they have released a package, a 3-year package worth $2.34 billion credit facility for Kenya. And the package is actually meant to help them support the next phase of the COVID-19 response and reduce their debt vulnerabilities. We all know that Kenya is currently experiencing, I think, the third wave of COVID-19 at the moment, and they need some emergency response. This is part of what this fund will be able to help them address. Now, Kenya Revenue Agency also succeeded in collecting some good revenues this month of March, which ended last week, and it was higher by some 6 billion Kenyan shillings, and that's like 11.2% revenue growth. And I think it's the highest since the beginning of the 2020-2021 financial year. And we understand that customs and domestic taxes, as well as payee and the likes, were the main triggers for the success this period. It's a similar case, but with a bit of a difference in Kenya, in South Africa, where South Africa's revenue agency also collected some 1.25 trillion rand in taxes for the 2020-2021 calendar year. But that's like 12% less than government's original target of some 1.4 trillion rand. But I mean, at the end of the day, they were able to get some collection, which is something that Nigeria has to really learn from in terms of tax to GDP, tax to revenue to GDP status as it were. So then you have South Africa. We all know what has been happening in Mozambique, and how now South Africa has been helping to evacuate citizens from the insurgent, the parts of that country of Mozambique that are affected by the insurgents, the activities of Al-Shabaab and the IS in the northern part of that country. One of the South African industrialists recently died in one of the attacks on the Palmer City recently. But I mean, South Africa has been actively involved in rescuing people and of course victims from that area, and they've been helping to manage the various internal camps in that area. In spite of the attacks in that part, you have AB InBev opening $180 million new brewery plants in Mozambique, but not in the parts where we have all of these attacks. It's in a safer place, I think. And the site has a capacity of some 2.4 million hectares per year. And we understand that that capacity could expand to more than 6.7 million eventually. Of course, in Morocco, the S&P cut their rating by one level to BB plus with a stable outlook, and that relates to their long-term foreign and local currency ratings. The review is due to that country's economic contraction at this point in time, and of course the growing deficit that they are currently experiencing. And finally, we understand that the IMF is expected to make the latest World Economic Outlook report today. And of course, that's something that we'll all be keeping our eyes on to also see how that will, what statement or comments they'll be making about Nigeria. Baobab, which is also a microfinance bank. I think we should know about it. They're also based in Nigeria. Succeeded in raising some 26.24 billion CFA, and that is to be able to help them firm up their footprints in some parts of West Africa, specifically Cote d'Ivoire and Senegal, ahead of the AFCFTA proper implementation. The headlines for today, and thank you for listening.
Thank you, Temple. We have now come to the question and answer portion of the meeting. If you would like to speak, you may raise your hand and we will give you an opportunity to speak, or you may use the chat box function and we will treat your question. A quick announcement before we take questions. Tomorrow, Dapo Ojo, the Group Treasurer at Vetiva Capital Management, will be speaking on investment opportunities in Euro bonds. It'll be at the normal breakfast meeting time tomorrow. I see that we have no questions for today. That means we have come to the conclusion of our meeting. On behalf of Vetiva Capital and our media partners at Frontier Africa Reports, we would like to thank everyone for joining us today. We continue to encourage everyone to keep safe, and we look forward to having you join us tomorrow at 8:30. We hope everybody has a good day. Goodbye.